So here we are. Bitcoin is hovering around $97,000. It's a number that just a couple of years ago would have sounded completely insane. For some people, this is validation. For others, it's a warning sign blinking in red. So the question is, are crypto prices inflated right now? Are we heading into another bubble? Let's rewind for a second. The last time Bitcoin went truly parabolic, we all know what happened. Massive retail inflows, celebrity endorsements, meme coins going to the moon, and then the crash, the typical cycle. So is this the same thing happening again, or is something fundamentally different this time? First, look at what's driving the price. Is it hype? Is it real demand? Is it institutional money piling in because they missed the last train? We now have Bitcoin ETFs. We've got more adoption. But let's be honest, narratives drive price in crypto just as much as fundamentals, if not more. Now think about how people behave when prices go up like this. Everyone's bullish. Everyone's got a price prediction, 150,000, 200,000. You hear it everywhere. But what's the actual utility that's growing to match that optimism? Are people transacting more with Bitcoin? Are more countries adopting it as legal tender? Or are we just chasing candles? Inflation fears and economic instability worldwide might be pushing people toward hard assets. That's part of it. But let's not ignore the fact that FOMO is real. If you're seeing new wallets getting created at a record pace, but no new tech breakthroughs, no new adoption curves, then maybe we're not seeing sustainable growth, maybe we're just watching another speculative run. Remember what happens in bubbles. Prices detach from reality. People stop asking, what is this actually worth? And start saying, who's going to buy it from me at a higher price? That's when markets get dangerous. It doesn't mean Bitcoin's going to crash tomorrow, but it does mean that the higher it goes, the more fragile the sentiment becomes. Look at altcoins too. Some of them are flying high again, and some are total ghost towns projects that haven't updated in months, devs that disappeared, but their tokens are pumping. That's not normal. That's not healthy. That's not driven by value. It's driven by greed and speculation. And let's not forget leverage. When prices climb, people start borrowing to go long. They use derivatives, options, futures, and suddenly everything is stacked on top of itself. One sharp correction and the liquidations start cascading. We've seen it before, more than once. But here's the twist, just because prices might be inflated doesn't mean we're in the exact same kind of bubble as 2017 or 2021. Crypto today is a different beast. There's more infrastructure, more maturity, and more money behind the scenes. But even big money makes emotional decisions when the charts are green for too long. So what do you do in a moment like this? Some people double down, some take profits, some sit on the sidelines and watch it all unfold. The only wrong move is assuming that prices can only go up, because they don't. They never have. Every market, especially one like crypto, moves in cycles. Boom, bust, build, repeat. And if we are in a bubble again, well, maybe that's not a bad thing. Bubbles bring attention. Attention brings users. Some stick around, most don't. But after the crash, the people who stay usually end up building the next wave. So yeah, crypto prices right now might be inflated. Bitcoin at 97,000 feels more like a moment of mass euphoria than measured, calculated growth. But that's part of the game. You can't separate hype from crypto. You can't filter out speculation and still expect those insane returns everyone secretly hopes for. Just don't confuse price with value. That's where most people get wrecked. If you're in this space, ask yourself, what are you actually investing in? A future, a philosophy, or just a number going up? Because when the music stops, and eventually it always does, you'll want to know where you stand.